Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure you subscribe. This is the place to go for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a very strong monthly demand and support area. From here, all these previous rejections to the upside were created. And what we can see is that at the moment, the market is testing once again this exact same zone, from which there is definitely the possibility to see bullish price action being created away from this zone, as already happened every time that the market tested this level. So on the monthly, everything seems quite in favor for more bullish continuation. Dropping down on the weekly time frame, what do we have? Now, here on the weekly time frame, what we can notice is that we did have the creation of this M pattern. After that, we wanted to see the completion at the neckline, which the market has now given us. However, in completing the pattern at the neckline, the market is also currently facing resistance. In fact, from here, all these previous rejections to the downside were created. However, it is also important to point out that exactly here, the market has the very strong supply, and this supply hasn't been properly tested yet, because previously when the market during this move to the upside was trying to go higher, it stopped exactly at this level before then reversing lower. And at the moment, we can see how the market has not tested this level yet, meaning that there is the possibility to see some more bullish continuation for a test of this zone, because usually when you have such a strong supply zone, the market is supposed to go and test what kind of liquidity we have in that zone, because these areas tend to act as magnets for the price. So from a weekly perspective, what we could expect is a potential move higher for a deeper test of this area before then getting a potential reversal lower. Going down on the daily time frame, what do we see? Now, from a daily perspective, this is where things get very interesting. In fact, I did speak about EURUSD quite a few times in the past. I spoke about it when the market was here. I explained all the reasons for which we could expect this rejection higher. Again, from here, I made a full breakdown explaining all the reasons for which we could expect the creation of a higher high. Then we had the creation of this M pattern, explained why we could expect the completion of the neckline, and then this impulse correction and continuation lower. And very near to the current price action, I spoke about EURUSD once again when the market was here, explaining all the reasons for which we could expect this move higher, correction, and continuation to the upside, which is exactly what the market just gave us. And by the way, I will link in the description all these previous analysis, so you can go and check them out for more free education. Now, at the moment, we can see that new structure is getting created. In fact, in creating this move to the downside, the market is also printing an M pattern. And what we know is that in general, after the creation of an M pattern, what we could expect is a potential move higher for the completion of the M pattern at the neckline, which is the previous support turned resistance. So here on the daily, if we will have the creation of this M pattern at that point, we could expect a potential completion at the neckline as at this previous support turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what institutions are doing in the market, and we check the data precisely for the euro, what we can see is that with the last reports in the long term, net positions have been increased. We went from 105k net positions all the way up to 151k net positions. This shows that in the long term, shorts have been decreased. In fact, we went from 133k all the way down to only 74k shorts. And if you look at the longs, more or less they're remaining the same. However, the low was at 215K. Now we're sitting at 226K. So overall, in the long term, institutions have been adding longs and closing shorts on the euro. And since all currencies on the spot are traded against the USD, this means that they have been adding longs and closing shorts on Euro USD. Now, this increases the probabilities that if we will have the creation of this M pattern, at that point, we could have a potential reversal higher for the completion of the M pattern at the neckline, as we were previously identifying by analyzing this market from a daily perspective. So if we will have the creation of this M pattern, this is a very interesting area, inside of which institutions might be adding more longs. So if we have the creation of this M pattern, how we could be approaching a potential completion at the neckline. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the completion of this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the price of the mentorship program from $497 all the way down to only $97. And as an option, since I have partnered with the forex broker Blueberry Markets, if after you join the mentorship program, you open an account with them, you can get a full refund credited back into your trading account if essentially you move your trading there. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and price goes back to normal. And directly from here, there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board, and at least go and check it out at transparentfxtrading.com. The link is also in the description. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.